You're here because you're wanting to know how you can possibly generate $40,000, $50,000, or even $60,000 annually in your Roth IRA. And by the end of this video, I'm going to show you a few ways you can do that. Many of the investments we're going to be looking at today can provide you a 3% yield all the way up to about an 8% yield. I even found an investment for you guys that can provide you up to an 11% yield if you're up for living on the wild side. In our last video in this series, we talked about growing your Roth IRA to $1 million and what investments could actually help get you there. By the way, if you haven't seen that video, you should really go check that out. These investments are going to provide you significantly more cash flow. So hopefully we can get enough cash flow from your Roth that is tax-free that you never have to touch the principal, and this income will last you for the rest of your life. The ETFs I'm about to show you in this video are going to be able to give you much higher yields than your average investment. So many of you requested this video. I must have got like 20 requests like just within a day or two for this video. So if you want cash flow, this is where the cash flow is at in the stock market. The best part of all is the type of income the government can't touch. Hands off our money, government. You've taken enough. Tap the like button if you don't like the government touching your money. But no, seriously, it would really mean a lot to me if you did tap the like button, because otherwise the YouTube algorithm takes my videos and my whole channel and throws it over a cliff. So please save my channel from going over that cliff by hitting the like button today. I really appreciate it. If you understand taxes and how to invest tax efficiently, well then you're going to understand why these type of investments are actually best suited within your Roth account.
These type of high-yielding investments is what the Roth excels at.
You want high streams of income tax-free, and that is what the Roth can do for you. At the point in which you're ready to turn your Roth IRA account into a cash cow, moo, this is when you want to trigger these investments. If a person sells off their growth investments too early, they can actually hinder the overall growth of their account balance over the long run, especially if they don't need the income right now, which is why I would stick with growth until you're closer to retirement. If you've been studying the stock market for any given period of time, you'll quickly realize like the average yield for if you're looking for dividends is usually like 2 to 3% on most investments. Well, that's not the case here. Starting with the lowest yield and working our way up. The lowest yielding investment we're looking at today is Vanguard's VYM, which is Vanguard's High Dividend Yield Fund. When they say high yielding, I think it's kind of misleading now when I look at this, because you can see that the price appreciation of this investment has gone up so much that the yield has fallen to about less than 3% actually. And so 3%, if you're getting like 2.5% to 3%, it's really not a lot. Even if you have $1 million, that's only like $25,000 to $30,000 a year in income. It's not that much. Although the yield is not that high, it's still an option because it's got great price appreciation. And secondly, the holdings of this fund, I think, are pretty stellar. I think you can have long-term sustainability of the income streams from this investment because of the type of companies it owns. If you want something closer to the 4% yield range, then take a look at SPYD. This is the Spider Portfolio S&P 500 High Dividend ETF. Half of this ETF's funds are invested in consumer cyclical type of investment. So you got about a quarter of it in real estate, you got a quarter of it in financials roughly. Then you got some utilities, you got healthcare, energy, and things like that. The price appreciation on this fund is really nothing to brag about, because if you look at the graph, if you look at the period before COVID, like we're looking at here, you can see it really didn't appreciate much in value, but you did have steady streams of income. Definitely more of an income-focused investment. I would not expect much growth or much appreciation from this. Okay, let's move you into those higher yields now. Let's go from like 2 to 4%. Now let's bump that up to 7 or 8%. How does that sound?
Right on! Let's do it! Rock that world! Rock that world!
Nationwide Risk Managed Income ETF is the first one I want to talk to you about. Ticker symbol is NUSI. So this investment seeks current income with downside protection. The fund is actively managed exchange-traded ETF that seeks to achieve its investment objective principally by investing in a portfolio of the stocks included in the NASDAQ 100 index and an options collar mix of written sold call options and long bought put options on the NASDAQ 100. It is non-diversified. We're going to be looking at a couple different covered call option ETFs, and these investments are fairly new. They haven't been around for a long time, but they are very high yielding and are gaining popularity quite quickly. The reason these type of ETFs can collect such a high dividend yield is because essentially they are selling and writing covered call options to investors. The fund is selling insurance to investors. So the dividend you're getting is really not so much like earnings from a company. It's more so like you're collecting insurance premiums from other investors who are buying covered call option contracts. Now, I know that was like a really dumbed down, very, very basic explanation, but there's a ton of videos on YouTube that cover different covered call options. You can check them out. I'm not going to produce a video on that. There's just so many already out there that explains these type of things in much greater detail. One of the things I like about Nusi is it buys puts, which gives it downside protection if the investments go down in value, but also the graph on this and price appreciation is pretty good. It's only been around for about a year because these things are brand new, but you get about a 7% yield plus price appreciation. Not a bad combo at all, in my opinion. Oh, and did I mention it pays monthly? Every month it pays you. The JP Morgan Equity Premium Income ETF is the next covered call option ETF I would suggest you take a look at. This fund gives you close to an 8% yield and has some pretty solid companies within it. Not only does it give a high income, but it also seeks capital appreciation as well. It says the fund seeks to provide the majority of the return associated with its primary benchmark, the Standard & Poor's 500, Total Return Index, S&P 500 Index, while exposing investors to less risk through lower volatility and still offering incremental income. Under normal circumstances, the fund invests at least 80% of its assets in equity securities. It may also invest in other equity securities not included in the S&P 500 index. This fund has not disappointed me at all thus far since I've owned it. I bought it this year in 2021. It's been around, I think, for only about 2 years. It's really new. Like I said, a lot of these are really new in type of investments, but you can see just like within a 2-year period, it's gained about 25% in capital appreciation. The next type of special investment I want to show you, and these are fairly new as well, but they're business development companies. And so what they do, let's read a little bit about Eris Capital, which is one of the best performing ones. It says Eris Capital Corporation is a business development company specializing in acquisition, recapitalization, I can't even say that, debt restructurings, rescue, financing, and leverage buyout transactions of middle market companies. It also makes growth capital and general refinancing. So they do a lot of debt restructuring and things like that. Now let's take a look at the yield. Currently this is going for about $20 a share, and the yield does not disappoint as it comes in around an 8% annual yield. Looking at the graph, you can see there's quite a bit of price appreciation if you bought in after the dip from COVID, but beyond that, I don't think there's as much price appreciation in this one, but the income of 8%, that's pretty fantastic. Also, I would suggest, though, doing some Google searches and reading up on what business development companies are so you can better understand how they function before you invest in them. Eris Capital is just one of the business development companies I would check out for your portfolio. Ticker symbol is ARCC. Next, I want you to take a look at the Blackstone Mortgage Trust. Ticker symbol is BXMT. It comes in at a whopping 7.5% dividend yield. Basically, what is it? It operates just like a REIT. So as Blackstone Mortgage Trust Inc. is a real estate finance company that originates senior loans collateralized by commercial properties in North America, Europe, and Australia. The company operates as a real estate investment trust for federal income tax purposes. This investment has actually been around 40 years, and you'll find that out if you look into the details on this. But I caution you to be careful of how much you invest in this because it's not a completely stable investment, and there's been a lot of volatility in the past. So just be mindful of how much money you're allocating into investments such as this one. The last large yielding investment I want to share with you today is ticker symbol QYLD, which is the Global X NASDAQ 100 Call ETF with an astounding 11.81% annual distribution yield. When you see a large yield like this, you should always be a little cautious. So nothing against you if you want to invest in this. I don't personally own this one, but it's a really popular one that people like online. It's one of the first covered call ETFs that I actually learned about. The thing I don't like about this, if you're looking on screen right now and looking at the graph, notice that QYLD, which is in the light blue, has very little price appreciation. It actually, if you look at the graph over the long term, it's actually trending downwards, which I would hate to see you get an 11 or 12% yield, but actually lose your principal. So principal is something I never want to lose if I can avoid it. I don't mind some volatility, you know what I mean? But if I'm losing the value of my overall investment, it's just not something I want to be invested in. But that's just me. A lot of people swear by this one. It's a great fund. If you want income, there's no yield like it. I mean, it's a fantastic yield, but it comes with some drawbacks. And you can see graphed out against QYLG, which is one I actually do own that has growth and a 6% yield. Check out QYLG as an alternative to this one. NUSI, gxBFY, and ARK, the business development company, you can see that all of those other funds have price appreciation and QYLD doesn't. But QYLD, if you're looking for income though, it has a massive income potential. Knowing the different types of investment alternatives you have out there for income can really help you build an income stream in retirement with your Roth. And now maybe you have a mix of investments that pay you 2, 3, or 4%, and maybe part of your account is in these higher yielding investments that pay 6, 7, or 8%, or even 11% if you want to be a little bit more on the wild side. Overall, if you can have your portfolio average, let's say 5% or 6%, even 4%, I mean, you're looking at anywhere from like $40,000 to $60,000 in annual income if your Roth IRA account balance is around $1 million, if you can grow to that over 30 years. With all of these investments, make sure you do your own research. Don't just dive into any of them. Make sure you understand what they do and what the risks are associated with these investments. Now, I realize we did not cover corporate bonds and we did not cover publicly traded partnerships. Those are some alternatives you can look at in relation to these other investments we discussed today. But in this video, I just wanted to show you more of the unconventional type of investment choices that are out there that most people just don't know about, that can provide really high yields. I want to say thanks again for all the requests for this video topic. It means a lot to have you here as part of this community, and I'll see you down in the comments. Let me know what you think of these different investment choices, or what are some alternatives besides the ones we discussed today that I did not mention. Leave those in the comments below. All right, everybody, thanks so much for watching. I'll see you in the next video. Have a wonderful week.